YouTube, fellas, I want to go over the day that I had today. Very hard personally and mentally, but I want to go over how I brought back my $440 loss to only a $200 loss. And this was the trades that I took and what happened. So I took a long in here I got filled on this candle at 15 and a quarter. I did not take profit because this was the high drawn liquidity that I wanted to hold for, but we had a high resistance liquidity run this morning. Since London expanded, you can assume that New York is going to be filled with accumulation or consolidation. And that's exactly what happened. We have complete utter chop, and then we finally delivered after running the sell stops down here, which was inside of this bullish for value gap. But it was absolutely such a headache morning. After that happened, I tried another stab at longs here. Again, trying to target this swing high. Same thing happened. Even if I had good entries and could have taken profit both times, this offered me over 32 points, which was plenty. And this offered me over 20 points, which was also plenty, but I was greedy and I wanted to take this high up here. I wanted to feel what it was like to hold for one of these higher targets, and I did it on the wrong session. I did it the wrong day, and that's what I learned today, and it was painful, and I regret it, but I learned from it, and you move on. And I recommend anybody else that is struggling right now to do the exact same thing. Don't continuously beat yourself up for it. Work on it, fix the problem, and you will have a much happier and peace of mind. So that was my second trade. I got stopped at a break even on this first one, by the way. So this is I got filled right here, a little bit underneath 830. After we took the sell stops, I thought we were gonna go up from there finally, but I trailed my stop from down. I trailed my stop from the mean threshold of this order block, which I almost got stopped out, to the swing low here because if I was on sides, this swing low shouldn't have been broken. I was not on sides. I got stopped out here for a 200 and some dollar loss. And then I tried to take another trade and I literally got stopped out in 7 seconds. This trade was completely stupid. I didn't learn my lesson. I reflected all of this stuff from earlier, um, this later in the afternoon, I should say, excuse me. And I got stopped out. I took an order right at this order block, which is also inside of this bullish breaker. And we were expecting this for value gap, so I wanted or down close candles to act as support. That's not that kind of move, so it's not going to happen. Price retraces into a fractal discount range, seeking this for value gap, running internal stops, which happened every single day today, besides the PM session. But I got stopped out literally in 7 seconds. Put my stop below this swing low. Got stopped out immediately. Pretty much in the same candle I entered on. So that was a revenge trade. That was the worst trade I've taken in probably like 5 months. I was pretty annoyed after that, but I did take a really nice trade setup on ES, which I'll show you guys right now. Um, and this is exactly why I took this trade. So if we go to the 5 minute and we use our standard deviations, projections, swing low to swing high, I used the first leg of the distribution because this standard deviation was way too long, way too big. I was not expecting price to come all the way down here since this is the daily fair value gap, which we were displacing out of from London session. So that is why I use this. And look what you know, price stops right at the 2 standard deviation. And we have internal 15-minute sell side liquidity being taken. And this was how I knew I was on sides. So internal sell sides was swept right here. It's this black line. This red one is the 2 standard deviation being met. When you hit the 2 to 2.5, that is when you can anticipate some kind of reversal. And I was looking at NQ at the same time. We came down, swept all this lows inside of this. We have sell side liquidity that is right outside. Whoops, wrong one. Right outside of a bullish for value gap. So that's exactly what I was looking at. This 5 minute or if you go to the 15, it's the same thing. But I was looking at the 5-minute. Price comes into this and then created a change in the state of delivery on both ES and NQ. I took ES because it was leading, and I understood that I was leading because of how price reacted from this 2 standard deviation. We broke this high, creating market structure shift, and this candle, once this candle was traded through, this is the last down close candle that took out liquidity from right here. So that is where you're looking for your change in the state of delivery, and that is exactly what happened. Change in the state of delivery, a market structure shift right here, and then price comes back into this fair value gap. I did not get this entry just because I was paper trading this entry down here on NQ, and just because I wasn't actually going to take another trade, but I wanted to see how price was going to continue higher. We also had a bunch of these 5-minute bearish fair value gaps up here, but I was expecting this high and these 3 equal highs to be the draw on ES, so that's also why I took ES, because NQ just had one or a few just big fair value gaps with not much liquidity inside. It did have these 2 equal highs, but I'd rather target 3 equal highs than 2, and this already kind of souped that one anyways. So we anticipate a smart money reversal occurring, which it did here, and it left a breakaway gap. And when we use our standard deviations, I used the same thing this first distribution leg just because this was too far. I wanted to see if I could find a silver bullet zone entry between the 1.5, and that was also inside of this inverse fair value gap, which is acting as support. This down close candle is acting as support. If you look at the price up here, if you look at the high of the candle, 78.75, the lower this candle, 78.75. That is when you know you're in a market maker buy model. Down close candles are acting as support, and that is exactly why I took this trade right here. This is the first fair value gap that I saw, even though it's in a premium of the range. That it's okay. You can buy in a premium when you are in a market maker buy model, because price is going to be continuously offering higher prices until the original consolidation gets taken out, and that's what this is up here. Even if you don't want to be targeting this fractal range external liquidity, which is this, even though it's inside of this is actually the fractal external range, but this is the original consolidation high, and this high was above here. That lined up perfectly with the 4 standard deviation. It's not a coincidence. All these markets are completely controlled. We have 2 equal highs right here inside this one swing high, which were also equal highs. And so I did not hold for long just because I was already down for the day, and I was trying to just make some of my money back, and I'm trying not to be, I will not be greedy from now on. I'll be targeting low hanging fruit like I was, just until I find more consistency. I need to be better at identifying higher probability condition days, not taking stupid dumb losses like I did in the morning. But silver bullet zone, fair value gap entry, beautiful. I got filled at 81, the bottom of this candle. And I have my stop loss right here. I did not want to see price come down and touch this again just because it already used as an immediate rebalance, came down, touched it, and left pretty fast. Displacement candles leaving fair value gaps, inversion fair value gaps, or SIBIs being created into inversions. As you can see, that price is using this as support. Same thing with the wick. Wicks are treated as gaps. Price doesn't even touch the mean threshold of the wick, which is really bullish. So I got filled at 81. Targeted 5 points, which was 86, and I got filled right here a few minutes later. And this is what price looks like when you're in a market maker buy model. See the difference between this price delivery and this from the morning? This is what I have to stop getting caught up into. This is what I need to stop giving my money back to, and that is when I will really start going on an upward equity curve, and I cannot wait for that to happen. But if you're struggling with the same thing, just identify what you're doing wrong and just focus on compounding gains. And as soon as you get better at identifying higher probability days and original consolidations, market maker models, etc., you'll be able to hold for these longer moves. This is a long journey that we're all on together. I got funded in 2.5 months for learning ICT for like 8, but um, I'll stop talking now. I hope you guys enjoyed this video. I hope you found some value out of it, and I'll see you guys in the next one.